Hey everyone, welcome back to the channel. In today's video, we're going to walk through a complete, beginner to advanced tutorial on building a MACD-based trading strategy using Python. We'll cover data collection, technical indicators, trade logic, backtesting, and performance evaluation, all in one project. If you're learning algorithmic trading or want to understand how technical indicators work under the hood, you're in the right place. This strategy uses the MACD indicator, which is one of the most popular momentum indicators used by traders, and we'll show how to turn those signals into real trades and evaluate their performance over 4 years of historical data. So grab your favorite drink, and let's dive in. We're using the Finance library to pull historical stock price data from Yahoo Finance. The symbol we're working with is BSOFT.NS, which refers to BSOFT traded on the NSE in India. We pull data from January 1st, 2020 to January 1st, 2024, which gives us a solid 4-year range to analyze. We make sure the data's index is set to a date-time format, which is super important when you're plotting or analyzing it over time. Now comes the heart of the strategy, the MACD, short for Moving Average Convergence Divergence. This indicator consists of EMA 12, the exponential moving average of the last 12 days. EMA 26, the exponential moving average of the last 26 days. The MACD line is calculated by subtracting EMA 26 from EMA 12. Then we compute the signal line, which is the 9-day EMA of the MACD line. When the MACD crosses above the signal line, it suggests upward momentum, a buy signal. When it crosses below, it suggests downward momentum, a sell signal. We then create 2 Boolean columns. Buy_signal becomes true when MACD crosses above the signal line. Sell_signal becomes true when MACD crosses below the signal line. These are our core trade signals. To detect the crossover, we compare today's MACD and signal line to the previous day's values using the shift 1 method. This helps prevent repainting and ensures the crossover already occurred. Now we simulate how this strategy would perform if we followed it for the last 4 years. We assume an initial capital of Indian rupee 1,000,000. We buy when we get a buy_signal and sell when we get a sell_signal. Here's how it works. If we're not in a trade and we get a buy signal, we invest all our capital. If we're in a trade and get a sell signal, we exit and calculate profit/loss. After each signal, we update our portfolio value to track the growth. All trades are logged into a list called trade_log, which we convert to a data frame to inspect and evaluate trades later. Once the backtest is complete, we compute key performance metrics. Total return, percentage increase in capital over 4 years. Annualized return, compounded annual return using 252 trading days per year. Maximum drawdown, the worst drop from a peak to a trough in portfolio value. Win rate, percentage of winning trades versus total closed trades. These help us understand how profitable and risky the strategy is. We then use Matplotlib to plot the stock's closing price with buy and sell signals marked, the MACD and signal lines to show crossovers, the portfolio value over time to visualize overall performance. These plots help visually verify whether the strategy is behaving correctly and identify trends or issues. Let's see backtest performance breakdown for the stock BSOFT.NS using a MACD-based trading strategy. The initial portfolio value was 100,000 Indian rupees. After running the strategy over the historical data, the final portfolio value grew to 438,676.41 Indian rupees. This translates to a total return of 338.68%, which is an impressive compounding over the backtest period. The annualized return, which tells us the average yearly return, stands at 45.59%, a strong performance, well above traditional market benchmarks. However, this strategy came with risk. The maximum drawdown was nearly 50%, which means at one point, the portfolio was down by half from its peak value. This highlights the importance of managing risk and having a strong mindset during volatile periods. The win rate is around 47.37%. That means just under half of all trades were profitable, but thanks to strong risk-reward ratios or trend capturing, the overall return still came out on top. Blue Book. Moving on to the trade log, we see sample trade activity. On January 2nd, 2020, A buy was executed at 68.38 Indian rupees for 1,462.32 units. This was sold 5 days later at 66.10 Indian rupees, slightly lower, for the same quantity, a small loss. The process repeats with multiple buys and sells, adjusting the quantity based on available capital and the stock price. You can observe that the strategy consistently enters and exits trades based on signals, likely from the MACD indicator. BSOFT.NS price and trading signals. The top section shows the stock's price chart along with buy and sell signals. Green upward triangles indicate buy signals, and red downward triangles show sell signals. Notice how the system tries to buy low and sell high during momentum shifts, perfect for a MACD crossover strategy. Throughout the timeline from 2020 to early 2024, you can see how the price rose significantly, especially in the second half of 2023, contributing to the strong final portfolio value. MACD and signal line. The middle chart shows the MACD line in blue and the signal line in orange. Whenever the blue MACD crosses above the orange line, it's typically a bullish signal. That's when buys happen. When it crosses below, it's bearish, leading to sell signals. Notice how this crossover logic aligns with the buy-sell markers in the top panel, giving you visual confirmation of the strategy's logic. Portfolio value over time. The bottom chart shows how your portfolio value evolved over time. You started around 100,000 Indian rupees, and there's a steady climb, with some dips and consolidations. One major peak happened around late 2021, followed by a drawdown in 2022, reflecting the market's overall weakness during that period. After mid-2023, the value picked up again sharply, closing near 440,000 Indian rupees, a solid growth over the 4-year span. This backtest demonstrates the power of a well-structured momentum strategy like MACD. While the win rate wasn't above 50%, the strategy still managed to yield excellent returns by capturing big moves and managing position sizes. However, the high drawdown suggests that proper capital allocation and stop-loss planning would be necessary when going live. This is one of the examples to explore this. If you want this script explored for all other stocks, let me know. I will share the Python script. So, what do we learn? This is a trend-following strategy, which works best in trending markets, not sideways ones. MACD is a lagging indicator. It follows price trends, so entries might not be at the exact bottom or top. No stop-loss or target profits were used here, which is not ideal for real trading. It assumes zero slippage and zero transaction costs, which isn't realistic. Always backtest with realistic assumptions and consider combining MACD with other filters like RSI, volume, or price action. Want to take this strategy further? Add risk management with a fixed stop-loss and target. Introduce position sizing instead of all-in trades. Combine MACD with trend confirmation using moving averages. Try optimizing the MACD parameters for different stocks or market conditions. Add filtering to avoid taking trades during flat or highly volatile periods. That wraps up today's session. We built a complete MACD trading strategy from scratch, ran a realistic backtest, and learned how to evaluate its performance using Python. If you found this useful, don't forget to like the video, subscribe to the channel, and drop a comment if you want to see more strategies like this or have a strategy of your own you'd like to code up together. Thanks for watching. See you in the next one. And until then, happy coding and profitable trading.